Hello. Are you ready to discover the hidden mathematics within the charts? Today, we'll explore step by step how to identify trading opportunities using the ABCD harmonic pattern. With this simple yet effective method, we'll decode the language of the market and unlock profitable strategies together. So, how about taking one step closer to your financial goals? Let's embark on this exciting journey right now. Have you ever heard of the ABCD harmonic pattern? Or better yet, what exactly does a harmonic pattern mean? What significance do these models hold for us? To put it simply, harmonic patterns are trading setups based on mathematical ratios and models. These strategies, which have been used for decades, continue to maintain their popularity even today. The model we'll dive into today is the ABCD pattern. As the name suggests, this model is built on 4 points. But how exactly is it used? How do we determine our stop loss and take profit points? Which numerical ratios guide us in this process? Let's take a closer look and uncover the answers together. There are 2 key rules we need to focus on when identifying the ABCD pattern. First, after the price forms points A and B, what is the retracement ratio it makes? In other words, at what level should point C fall? Point C must lie between the 0.618 and 0.886 Fibonacci levels to meet the first requirement of the pattern. If the retracement goes deeper, or if point A is broken, the conditions for the ABCD pattern are not fulfilled. Once the price retraces to the desired level at point C, the next critical step is to watch for the break of point B. This is essential because after point B is broken, the 1.27 Fibonacci level becomes the zone where we anticipate a reversal. Based on this, we can structure our trading plan and strategy. Now, let's solidify our understanding with a clear example and modeling. When we analyze this price movement, we first identify the high and low points, namely points A and B. From these points, we draw a Fibonacci channel and wait to see if the price reacts to our retracement zone. Will it respect the zone and give us the setup we're looking for? Let's dive in and observe it together. The price did not respect the zone we identified and fell even further, breaking point A in the process. This indicates that the setup did not meet the criteria for the ABCD pattern we were looking for. Now, let's move on and analyze a different chart to explore another scenario. In this price movement, just as we did in the first scenario, we start by identifying the low and high points, which we mark as points A and B. After defining these regions, we draw a Fibonacci retracement and observe how the price reacts to this zone. Let's analyze together and see if the price respects our expectations this time. It seems that the price has made a nice bounce from the retracement zone we were watching. Now, what we want to see is the price continuing in the same direction and breaking the B region. The reason for this is to confirm that point C is indeed a valid retracement zone with the correct ratio. Let's see if the price continues upward and gives us the confirmation we're looking for. Well, that was an even faster drop than we anticipated. This shows us that even a good initial reaction from the price isn't enough on its own. That's exactly why we wait for the B point to break, to confirm the validity of the setup. How about taking a look at one last chart? If your answer is yes, then let's keep going. Now let's break down what we need to do step by step and solidify the rules by analyzing them on the chart. Identify points A and B. Start by clearly marking the high and low points of the price movement, which we'll refer to as points A and B. Draw a Fibonacci retracement plot, a Fibonacci retracement between points A and B, and closely observe the 0.618 to 0.886 levels. Validate point C. If the price pullback occurs within these levels, Mark this area as the potential point C. If there's a deeper retracement or if point A is broken, the pattern becomes invalid. Wait for point B to break. After the price reverses from point C, it must move upward and break point B. This is a critical step to confirm the continuation of the pattern. After breaking point B, the 1.27 Fibonacci level will become our entry zone for the trade. To identify this area, simply draw a Fibonacci retracement from point B to point C. The 1.41 level will serve as our stop-loss point, ensuring we manage our risk effectively. Take Profit 1 will be at the C level, providing a conservative target. Take Profit 2 will be at the starting point of the move, which is point A, offering a more extended target. Now, let's set up an example trade and analyze it step by step on the chart to visualize how this strategy works. Alright, now we've reached the more detailed section. In this part, we will combine price action with the ABCD harmonic pattern to analyze market movements. We will carefully examine the chart, identify the most logical trade scenarios, and then build our own strategies step by step. Are you ready? Let's begin this exciting journey to deepen our strategies and take our trades to the next level. When I look at the chart, I can see that the price came down and then these areas got filled and started rising again. The ABCD pattern will be very useful here to identify these pullbacks, as it helps pinpoint the exact reversal areas. Additionally, to find reversals, supply-demand zones or imbalance regions, along with order blocks that come before these zones, can be very helpful for us. Therefore, I want to first find an ABCD pattern and then locate an order block or supply-demand zone that supports this pattern. Now let's take a closer look at the chart and see how this aligns with our strategy. When I examine the chart, the first thing I notice is an ABCD pattern in this area. I draw a line from A to B and then another from B to C. I check the ratio between A and C and see that it is 0.688, which is a valid ratio for me. Next, I check if the B point has been broken. As you can see, the B point is indeed broken. The last thing to do is to determine the 1.27 Fibonacci level for the D point. I draw a Fibonacci retracement from B to C and find the 1.27 level, which will serve as my entry point. However, I notice something else that catches my attention. When I look at the left side of the chart, there's a supply zone that coincides perfectly with the 1.27 level. I mark this area on the chart. Now I have two confirmations, the 1.27 level of the ABCD pattern, a supply zone aligning with the same level. What can I do here? Sticking strictly to the ABCD pattern, I can set my stop loss at the 1.41 level and take profit sequentially at the CNA levels. Alternatively, I could incorporate a second strategy by entering the trade from the supply zone. I would set my stop loss slightly above the supply zone and target the lowest point the price has reached as my take profit level. By analyzing price action through the ABCD pattern, I effectively create a new strategy for myself. Moreover, incorporating price action into my setup helps me make my trades more secure. When I examine the price a bit further, I notice something else. Another ABCD formation. And what a coincidence that the 1.27 level of this formation also aligns with the same supply zone. We can apply the exact same strategies here as we did earlier. What I'm saying is that combining the ABCD formation with price action can genuinely help you create a safer and more consistent profit chart. Do you have your own strategy? If so, share it in the comments and help others improve and develop their own strategies. If you like my video and want to see more content like this, you know what to do. I wish you success in your daily and trading life, my friend. Stay with us.